back and relax while in just a few short minutes, we will cover the price charts, top news headlines, and preview the upcoming economic data releases. Now I'll turn things over for an analysis of the most popular charts.
The euro has been volatile between 1.138 and 1.15 resistance. The long-legged doji pattern on Thursday's daily candle shows indecision. The British pound remains well supported after rebounding from a dip off 1.35, but 1.365 is offering stiff resistance. The dollar-yen successfully tested the multi-years highs at 116.3 and dropped back to where 115.6 will need to hold for the chance of a near-term breakout. Gold has rallied strongly back to 1840, having successfully held the support near 1780. A clear breakout of 1850 is needed for an uptrend to take hold. UK oil is holding support at 91, while consolidating after hitting multi-year highs at 94. 89 is next support, while 96 is next resistance. The S&P 500 cannot get past 4,600. Dropping away from the level for a second time since the late January sell-off. Support is at the 20 DMA, then 4,440. Bitcoin has broken back over its 20-day moving average to test the 45,000 level twice. Should it break out, the next major resistance is over 52,000.
Right, from technical analysis, we move to the fundamentals. These were the headlines that stirred markets the most last week.
Dollar dumps then jumps after CPI. The US dollar was volatile this week after consumer prices hit the highest since 1982. Inflation highest since 1982. US inflation reached a fresh 40-year high after CPI rose 7.5% YoY in January. James Bullard has turned very hawkish. St. Louis Fed President James Bullard said he favors a 100 basis point increase in rates by July. Swaps markets are now pricing in 6 rate hikes this year. Gold retakes 1840. The price of gold gained for 5 days on the trot thanks to renewed investor demand for a hedge against inflation. US 10-year rises over 2%. The US 10-year Treasury yield, what many consider to be the default, risk-free, asset in markets, rose to 2% for the first time since 2019. EC President Lagarde pushes back. ECB President Christine Lagarde talked down the chances of many rate hikes this year after the sudden rise in the euro since the ECB meeting. FTSE 100 reaches 2-year high. The UK's FTSE 100 reached its highest since January 2020, outperforming most global indices this week. WTI hits $90 per barrel. The benchmark US crude oil futures contract rose to a 7-year high over $90 per barrel this week.
Thank you very much for that. Let's round things off with the highlights from the coming week's economic data releases.
Fed minutes were recorded at the January meeting when the Fed laid the groundwork for a March rate hike. Now there is talk of a 50 basis point move instead of the usual 25 basis points. Investors will be parsing the minutes for any discussion of a 0.5% hike. Inflation and unemployment data from January support the planned March rate hike, but retail sales could affect investors' reaction to the rate hike. If rising prices are hurting consumption, the Fed might find itself raising rates into a slowing economy. Given that the ECB is now eyeing a rate hike in 2022, Eurozone Q4 GDP data will be important. Omicron may have dented activity in December, but so long as growth holds up, the ECB has no reason not to hike rates to stop high inflation. There is inflation data from both the UK and Japan at the end of the week. Another monthly rise in UK CPI will likely mean a third rate hike in a row, while rising inflation in Japan might set the stage for a policy pivot from the Bank of Japan.
That's it for this week. Make sure to subscribe to our channel for all the latest updates and have a great week trading.